Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the euro come back just a bit after making a trek down here to the 61% retracement here. We'll pop that up real quickly. So we made this trek down here, and we're finally starting to see this thing build up a little bit ahead of the FOMC, which they are expected to cut, but people are looking for potentially a bit what's being referred to as a hawkish cut, so only 25 basis point. And the case, I mean, normally I would say there's no reason for a cut whatsoever, but obviously under circumstances and there's still the risk that will slow down a bit, but if you look at normal times, it wouldn't warrant a cut whatsoever. But in this type of environment, the way things are looking, we'll get the 25 basis points, but I don't think it'll be necessarily hawkish. I don't believe that. We'll see what happens is really what the case I'm trying to make. I do see the cable has slid here. I know Amanda, she was in the chat room, she had covered. I remember her mentioning that just yesterday morning, and her saying that was her target, and well done. She did go on to get to her target. And we've seen the dollar CAD kind of going up and down a bit here, but still with the upside bias. We talked about that. I thought initially when the starts came, I thought we'd be opening sub 132, and we saw the dollar CAD take a dip, but then when Trump said about opening up the SPR, things kind of reversed around, and we still never fell as much as I would have thought. Even when the crude oil returned back late in the day, I would have thought we would have had a far better slide. But anyway, there's that. We are seeing dollar peso come up a little bit higher. Here's that 1937 we've been talking about last week. Same thing with the whole drone attacks. I would have thought that we may have gone and have to test lower, but we did not. Japanese yen has made a push up here. It looks like we've gone and made a push all the way up to just notice that 1836. Okay, so now we do have the BOJ. Yes, we had our bias chart resistance at 804, but someone was asking about why is it up so high, and that was in the chat room. I think it was late in the day, late in the afternoon. I mentioned, well, because of the BOJ, and we have had a very nice recovery since you would have thought safe haven flows after the drone explosion. But BOJ is expected to offer some stimulus. So my thoughts are, I think that dollar will be a sell, but I'd rather wait until after we get past the BOJ. I don't want to do anything at that point. And we've seen the Aussie finally come back in just a bit. And let's go on and take a look here with oil and gold. Oil made quite the recovery yesterday afternoon, actually even taking out the prior highs. And then we dipped back a little bit. We're kind of holding with a little bit of a steadier upside here at the moment. Gold relatively quiet. I was mentioning yesterday, I said, boy, I would have thought we would have seen a far better reaction, at least on the open on Sunday with gold. And then we've kind of given some of that back, which is kind of holding steady, at least on the spot at about 1494. And we're going to take, and S&P, same thing here. I would expect a bigger move. We did talk about this in the room. Also, someone asked, and I mentioned this, and I think it was in the daily roundup too, which I was looking for the resistance at 3004. And then I looked for the market then to pair back. But as you can see here, we got up to about 3,325. We did pair back a little bit. We've reasserted ourselves in Asia. And then we've kind of slid back a little bit, but still the market doing very, very well, really. Like I said, to me, it didn't seem like we got very much of a reaction to a certain extent. The markets from the whole crude oil issue. We are seeing the Euro Kiwi continue to move higher. Euro also kind of holding its own after moving just a little bit higher. Guppy has gone and pulled back after we had that very, very strong move. And the Aussie yen, you can see here, has given a decent amount of its gains back. Not a whole lot, but I'm saying it's after we had that phenomenal run that we saw. Look at that. That's a huge run. And I mean, on the very short-term basis, obviously still holding up very, very well. Let's go on and move into the economic calendar. So at the top of the next hour, we do have the zoo numbers. They're actually expected to come in even weaker. Look at this, a minus 37. That's after the prior was minus 44. We shall see, and that's going to be economic sentiment and then current conditions to just dip down a little bit further too. Later on this morning, around 8 a.m. Eastern, there's not a specific a time when it comes out, but we do have New Zealand dairy prices. And 8:30 Eastern, we do have Canadian manufacturing sales, along with industrial production and capacity utilization. Now, that's going to be at 9:15 Eastern. I'm in Texas, so I have my clock set here on Central. So it's 9:15 Eastern. And let's take a look at then at 10 a.m. Eastern, we do have NHB housing market. So let's go and take a look at the news here. Bear with me. So in the morning bid, the shock of the weekend attacks on Saudi oil installations have dissipated as markets quickly refocus on tomorrow's Federal Reserve decision. Market murmurs on Monday that the oil price spike might influence the Fed's decision by providing ammunition for inflation warriors have been dismissed by most central bank market watchers. The increase in oil prices remains contained and the world is well supplied with crude despite the outage. They're now likely to be several weeks at least. At about 68.70 a barrel early Tuesday, Brent crude oil prices were up 14% from Friday and back to where in May of this year, and still some down 13% over this time in 2018. For a world economy still puzzling over years of inflation that persistently undershoots central bank targets, this oil price move of its own will not change that picture. Although political and military implications of the attack and the tense U.S.-Iran standoff will weigh on confidence generally. With China already vulnerable, growth picture challenged more than by higher prices. Shanghai underperformed overnight and lost almost 2% as the offshore yuan weakened to 7.1 per dollar. With the Fed fully in focus, 10-year Treasury yields were around 1.84 after slipping about 5 basis points on Monday. The dollar was stronger going into the Fed decision, perhaps still in the possibility the Fed might register a note of caution alongside the expected quarter point cut, despite the pressure from the White House in easing policy dramatically. Euro dollar dipped under 110 late yesterday and remained there first thing today. Sterling was also lower after an inconclusive meeting between PM Johnson and EC Commission President Jean-Claude Juncker on Monday before a UK Supreme Court hearing starting on Tuesday. Let's go move into about the dollar. That's really not saying a whole bunch of anything. Dollar buoyed as markets digest oil and Aussie sold. The greenback found broad support on Tuesday, and the geopolitical and economic uncertainties cast by the attacks on Saudi oil filters, while the Australian dollar was sharply sold after a dovish readout from the central bank. Oil prices pulled back from soaring heights touched on Monday, and the yen and Swiss franc gave up gains. The dollar rose to its strongest since August the 1st against the yen, touching 108.36, helped by the President Trump's announcing he struck a trade agreement with Tokyo. Moves were slight, however, as traders await outcome of the U.S. Federal Reserve's policy meeting on Wednesday with strong expectations for cutting interest rates, and the Bank of Japan meeting on Thursday that could result in more stimulus. The market is in limbo between the oil price shock and the Fed meeting, said Matt Simpson, senior market analyst at Gain Capital in Singapore. Likely, and like any price setback, people let go. What the hell has happened? What do we make of it? It didn't really spill over into the currency markets like we might have expected, and that has been my take. We just certainly haven't seen much of a reaction whatsoever, with the exception of those impacted currencies, the Noki and the Canadian dollar. Chinese yuan wavered, shedding a lack of news ahead of the meetings. scheduled on Thursday between junior U.S. and China trade officials began to sap markets' optimism about the chance of a breakthrough. The biggest major mover among currencies was the Australian dollar, which dropped 0.4 to an 11-day low, dragging the New Zealand dollar with it after the Federal Reserve Bank of Australia flagged an easing bias in its meeting minutes. They would no longer talk about an accumulation of evidence in order to ease again and highlights risk to the global economy, said National Australian Bank Rodrigo Catrill. Another factor boosting the greenback on Tuesday was some exiting bearish dollar bets in advance of the Federal Reserve's two-day policy. Traders widely expect the Fed will cut interest rates by a quarter percentage point on Wednesday, but their uncertainty around the timing has faltered in recent days, with the probability that the Fed will stand pat, raising from about a fifth to 33% this week, while expectations for 2 more rounds of cuts by Christmas remain intact. Markets are pricing in 2 additional rate cuts by next year, but the Fed is unlikely to make such a forecast, so we could just see a further gain in the dollar, said Yukio Ishizuki. And Trump said it looks like Iran did the strikes. Okay, let's just go and move on. I'm spending more time on this. So let's go and take a look where we are with the euro. Now, I did do the basic technical analysis for the on the euro, and what we're looking at right now is, and we'll come into the 2 hour. We're looking at 965 down here on the lower end. Although we held, you can see here, because we did have hit 997, but in case we were to fall back even further, if someone was short and saying, boy, where would I look for the next level of support, that'd be 965. So we're holding better today right now. So right now we'll go on and come in. It's going to come in right there at 981. 981. And resistance, well, that's going to be that support line. When we came into yesterday and we had bias chart support at 1033, well, that bias resistance support is now going to be resistance. And there we go. So this will be resistance on the way back up, which was support. We'll see if we can move this market a little bit higher. May be able to. We did come up above this 20, probably looking on a very, very, very short-term basis. Probably almost at 25 almost. About there. We may see a little pop up there and then maybe dip back. We'll see. And let's take a look here with the cable. Now, cable has gone and pared back a bit here. Let's see here. Support's going to come in right there. I think we had that yesterday, which was 23.82. And on the upside, for now is going to be just a bit above there, 24.55, 24.55. Kind of falling, well, just basically right here in this little channel. You can see they came down here, and we had 23.82. We're looking for, as I mentioned on this upside, be 24.55. Cable still trading relatively strong. We're still in a buy mode here, but this 23.82 we had from yesterday should still stay pat. go and move into the Aussie. Well, it's probably not a surprise that the Aussie did go and ease back a bit right here from this level. The market looked a little bit tired at this point. You can see here. And so pairing back a bit, the 68.31 is key. We're going to go on in this market. Is going to be right there, 68.09. And on the upside, right there at 68.80. Hang on, other laptops over here trying to kick in some. Hold on, please. It's not one thing, it's another. Okay, let's go move into the Kiwi. We've seen the Kiwi going and pair back in here, and you can see right. We'll take a look at it just to pull back here. On the 2-hour chart. We're just past the 61%. And support's going to come in right here at 63.16. Right there. And resistance for right now is going to be right there at 63.68. Fairly tight trading. You can see here that the ranges have been very, very tight, and we're looking at it here on a 2-hour chart, and you can see here these 2-hour bars, and we're not even moving much. So it's going to be 63, 68 on the upside. And pair still remains bearish. Let's go and move into the dollar CAD. Now, to start out the week, I would have thought that we'd have finished, that we would have, opened much lower, below 32, and be challenging lower. Obviously, as you even saw in the story, we just really didn't see that much of a reaction, and certainly, this is one of the currencies that was directly affected. But I would have thought that we would have, at least on the opening go round, on Sunday, we would have opened below 132, and we didn't even, like I said, we held up. And then when Trump had mentioned about releasing SPR, potential releasing for SPR, that provided a bid under here, and so we've gone and moved higher. We had quite the run up yesterday as crude continued to slide, and then we came back in. We went up to 32.87. That was actually our bias chart resistance. If anybody was trading it, was right at 32.87. Really a mixed bag in here. Let's go and move into the 2-hour chart to get an idea of what we're looking at for today's bias chart resistance. Gonna keep it fairly tight. So it's gonna be 32.64. With bias chart support coming in at right there, 32.11. Let's move into the dollar peso. Once again, here's another one that was a bit of a surprise. Not surprise. I mean, we were looking for 1937 since the middle of last week. But I thought with those Saudi oil strikes, we might have, pushed this market lower. We did not. And that 1937 has really held quite nicely. I mean, we've dipped as low as looks like 1934.7. So it's off about 2 cents, 2.3 cents. But it's actually held up rather nicely. It's 1937. We had already come off quite a bit. And I think it's 1931 was going to be the 61% back. We can actually look at the daily. Yeah, 1932 is a 61% back. So you've got a good little cushion. I only have the 1937. You have the 1932, the 61%. Certainly, we did not see that reaction, off of the Saudi oil strike. So once again, reaction across the currency spectrum was rather limited, to go on and say the least. So that being said, taking a look here for the bias chart. Support's going to come in right there. 1940.7. And resistance. We can still push higher, but on this first go round, I look right there at 1953. I just call it 1954. And this is definitely not bullish. Don't forget that we do have German Zoo at the top of the hour, so that may you may see the euro go offer. Now we're kind of hanging on around this 1020, but we may see this thing go offer here. Let's go move into the dollar yen. $8.27 is 78%. We did make a stab up here to 8.36, kind of backed up a little bit, but the BOJ is coming up, and we certainly have recovered very nicely from the safe haven bids for the yen. We've opened up, and we actually dipped down to our bias chart support to start the week, which is 752. We just dipped below that, I think, about 4 pips or something like that, maybe 5, and then we came back, and Trump announced trade deal with Japan, or partial trade deal. They gave it an extra bid, and with the BOJ on tap, certainly they're going to go on and offer some additional stimulus. So you have to wonder, how much further can we go here? We already hit this 827 to 78%. As we go into the BOJ, then you have to factor in a potential move up here, at least for starters, of 877 for starters here. For today, though, I mean, this market's going to keep on moving higher as we get closer to the BOJ, and there isn't any signs of it relaxing at this point. But we may sit here, for a bit here until we actually see the BOJ. I'll get to that point. So we're going to go with the resistance here. Let's see here. It's going to be 834. 834. We'll keep it in check. And actually, we made it up to 836, so it's 834. We have a level there. Once again, I was looking to sell Dalian, but I don't want to do anything until Bank of Japan. I don't see any reason to put oneself in the crosshairs. As far as support, well, we're buying those dips where the market is. So it's going to be right here at 787 right now. With that, let's go move into the cash dollar index. Well, we actually came up here and tagged this 874. We actually had our bias chart resistance yesterday at 862. Okay. So we did go and tag up that 98.74. We tagged that. Well, I did the bias chart resistance. I mean, when I did the review last night in Asia, I kept it for 98.62, but we did go up there and tag that 74, or the euro itself in itself took a dip itself a little bit lower. Um, Resistance, we'll just put it right there at 98.70. And support's going to come down here at 98.30. 98.30. You can probably look at some additional right here at 98.39. But if we're going to push lower ahead of, if we do, and then we see the euro start to strengthen, it's going to come in right there at 98.30. Now, in order for things to turn around for the euro, we have to get back above bias chart resistance, which is 10.33, which was good support yesterday. Matter of fact, going into the week, I said, hey, if we got to close a daily close below 830, that opened the door for a challenge of 967. So we did see the market dip down to, what was it, 990 or 990. So the market stayed, offered, and then we've started to come back, but we need to get secure in order for this to nullify the downside. We'd have to get a daily close of 1033, a daily close. Doesn't turn it bullish. I'm just saying that would nullify it in the very short haul. Let's go and move into the cross rates. Well, we did have that gap lower, and the Kiwi's already been weakened, so we're kind of hanging on to the 68.46. We'll take a look at it on a 2-hour chart. We're looking for 68.38, and we've come down to 68.40. So not bad. We'll keep the 68.38. The difference will be on the upside. It's going to be 68.75. Let's go move into the euro yen. Kind of just marking time here after we slipped, we gap lower, and resistance is going to be right there at 1939. And there's going to be support 1879 right there. You can see resistance coming up right in here with the euro odd. If the euro can strengthen a bit more, at 61.43. And support, it's going to be 60, 60, 60, 67. We've broken up high. You can see here we've had a good solid close above here. It's pushed the door open a little bit higher, but this is going to be support now at the 60, 67. Right here, we were able to take out this little level right in here. And because it's bullish, this is where the real volume would come in, which would be 60.48. But because we've been able to break above this little trough, this will be support for right now, 60.67. Open the door for this market to move higher. And actually on a short-term basis, I mean, if you're looking on a 30-minute, we have generated a buy signal on this thing. Let's go to the Euro Kiwi. Kiwi has had its woes, so definitely open the door for us to move higher. Potentially a move to the 78%, but buy chart resistance is going to come in right there, 74.51. Support's pretty clear. It's going to come in right there. 72.96. That might be a little bit rich, considering how weak the Kiwi is. So we'll go right there. 73.27. Okay, let's go move into the ASEAN. So this pair's had a pretty phenomenal run here, and we've gone and paired back a bit, but God, look at the stalwart run we've had. And obviously ahead of the BOJ, even despite the weakness in the Aussie, or slight weakness here, this is still going to be very well supported. Bias chart support is going to remain right here at 73.71. I said 57 should be 73.71. Well, with the coming in there, we had lower numbers with the as we came into the yesterday session, thinking that we'd see far greater yen strength with safe haven flows. resistance is right there, 74.26. Let's go to the guppy. Had a pretty good solid run here with the guppy. And we've eased back a bit with the weakness in starting and weakness here. But we have gone and turned things around just a bit as the yen has weakened itself. Resistance will still remain this 34. We'll go with 34.49. We'll call it 34.50. And support, well, it just about tagged that. That's going to be this level here. 33.95. And lastly, we'll take a look at sterling odd. Made a good, strong recovery here. This is actually going to be resistance right there, 81.88. And support will come in right there. $81.16. Nice recovery. I mean, we had broken this downtrend line. You can see that coming across. Had the opportunity to push higher, but we are coming into some resistance right in here on the sterling odd. Going back to the main screen. You can see the euro started to slide back a bit. And that's what I was mentioning, was that with the German zoo numbers coming up at the top of the hour, and the Reuters poll is just, well, they're looking for a poor showing. Last month's was negative 44.1, and that was bad enough. Now they're looking for minus 37. So that's what I was indicating here, is that you're going to see this thing potentially go on the offer. And it hasn't gone on the offer that much, but it's certainly not bid. And we started to slide back after getting up as high as, what, about 10.22 or so. And we even said on a short term, if you're looking on a very, very short term basis, even though we had 10.33, I think we were saying about 10.25, and the market topped out at about 10.23, just about 10.23. And look, we're starting to slide back now, going to that zoo. So we're seeing the dollar peso move higher. Look at this. Dollar peso out of nowhere just starting to really strengthen up here now to almost 1950. Dollar yen still keeping its bid here. Well, that's what we have for now. Thanks for joining us here. We can see you again once again on the FX Daily Wrap Up. Thanks for joining us here.